In today's video, I'm going to be sharing with you one of the most powerful and effective entry models that I use every single day to make over $10,000 a month consistently. Using this entry model has helped me take more winning trades, avoid unnecessary losses, and help me find more accurate setups with minimal risk and high reward. So with this being said, let's not waste any time and let's get right into the video. So what we're going to be talking about today is what's called the 3-bar pattern. And the 3-bar pattern is one of the most effective entry models that you can use for continuations and reversals. We're going to take a deep dive on exactly what the 3-bar pattern is, the difference between a strong 3-bar pattern and a weak 3-bar pattern. We're going to take a look at continuation setups and reversal setups. And then of course, we're going to be going over some live examples at the end. So let's get right into the charts. So as you can see right here, what I have is the bullish entry model and also have the bearish entry model as well. So for the bullish 3-bar pattern, what it's made up of is 3 candles. So our first candle in this case is what's called our lead candle. Our lead candle is what we like to see a push in towards some sort of key level of support. So this key level support can be a higher time frame key level. It can be your previous day high. It can be your previous day low. All you want to see is a lead candle push into some sort of key level on the higher time frames. Our second candle in this case is what's called the reaction candle. So our reaction candle, we like to see buyers step in off your key level of support, indicating that we want to potentially push price back towards the upside. And then what we have in this case is our third candle. Our third candle is our confirmation candle. So our third candle is going to be the most important candle out of all three. So what we like to see happen in this case is if the third candle can close above its second candle, right? This is what's called a normal 3-bar pattern. And what we're going to be looking for is an entry with a stop at our second candle low. And we're going to be looking for a continued push back towards the upside. So this is a normal 3-bar pattern towards the upside. The second potential bullish entry model that we have is if the third candle can close above its first candle. So as you can see right here, if the third candle can close above its second candle, it can also close above its first candle as well. This is a very bullish 3-bar pattern. This is one of the most bullish patterns that we can see, and this usually indicates that we're in a very much clear uptrend and price wants to head towards the upside fairly quickly. So this is the most bullish case, and in this case what you'd be looking for is an entry at the top of the candle, and then you'd have your stop at the low of the third candle, and of course you'd be looking for a continued push back towards the upside on the higher time frames. As I mentioned, the third candle is the most important candle. You want to see either a close above its second candle or the first candle if you want to see the most bullish 3-bar pattern. And then on the right hand side, what we have is the bearish entry model. So the exact same thing as a bullish entry model, but towards the downside. So in this case, as you can see, what we have is what's called our lead candle. Our lead candle pushes price towards the upside into some sort of key level of resistance. So in this case, we have a key level of resistance. Now our second candle is what's called a reaction candle. So we like to see some sort of sellers step in off of our resistance. This candle can be bullish, it can be bearish, it doesn't matter. All you want to see is sellers step in off this key level. And then our third candle in this case is the most important candle, which is the confirmation candle, as I mentioned. So the confirmation candle, what we like to see is a close below our second candle. So if you can close below our second candle, this is going to indicate that price can continue towards the downside. So if the third candle closes below our second candle, we can have a stop at the second candle high, and we could be looking for a continued push towards the downside. And the most bearish entry model is if the third candle closes below its first candle. If you get that close below our first candle, that means we close below our second candle as well. This is by far the most bearish scenario, and we can expect a lot more continuation towards the downside on the overall markets. So hopefully you guys have a basic understanding of how these entry models work. Now let's go on to some continuation setups and some reversal setups that we can look over. So right here, you can see we have our bullish entry model, and we're looking for a continued push towards the upside. So you can see we're making higher highs, higher lows, higher highs, and we're continuing to push towards the upside. So this is our previous level of resistance. We're breaking structure towards the upside. Now we're coming back down in towards our level of support. And now what we're going to be looking for is potential continuation towards the upside. So what we like to see here is we can zoom in just a little bit. So what we like to look for is our bullish entry model. So as I mentioned, what I like to see is your number one candle, which is your lead candle. Your lead candle is now pushing into a key level of support. We have our second candle in this case, which is our reaction candle. You can see that the buyers are stepping in off this candle. Now our third candle is what's going to be important. Our third candle is going to determine if price is going to continue back towards the upside, or we could potentially reverse back towards the downside depending on how this candle closes. So that's why the third candle is very important. This candle could very much look bullish, but if the candle closes weak, you can see this is a complete invalidation of what the setup would actually look like. And potentially we could have a reversal in the overall market if we do not have that third candle that closes above its second candle. So in this case, what we like to see for a bullish entry model continuation is for the third candle to close above its second candle. So in this case, if we have that third candle that closes above its second candle, as you can see right here, this is where that candle closes. It closes above its second candle. What we can be doing is looking for an entry as soon as this candle closes with your stop below the second candle. And now in this case, we'd be looking for continuation back towards the upside and above. So this is a normal bullish entry model. And the second entry model that we have is if the third candle closes above its first candle. So we can see in this case, if we can close above its first candle along with the second candle as well, this is a very, very bullish entry model. This looks a lot more bullish than the one that we just looked at previous. And what we can do in this case is have an entry at the close of this candle. Our stop can be a break underneath the candle that we just created. And we can be looking for continuation, high of day, and back towards the upside as well. So as you can see right here, this is a bullish entry model for continuation. Now let's go on to a bearish entry model for continuation towards the downside. So as you can see right here, this is a bearish entry model continuation towards the downside. It's basically the same thing for the upside, but to the downside. So you can see in this case, what we have is a clear downtrend. We're making lower highs, lower lows, lower highs, lower lows. You can see we're breaking structure towards the downside. Now we're coming back up to retest these up close candles, your previous level of support. Now you'd like to see turn into resistance for a continuation towards the downside. So as you can see, as price is pushing back in towards this key level of resistance, what we want to mark out here is our first candle. This is going to be our lead candle. As I mentioned, we want to see it push up in towards this key level of now support turn into resistance. We have our second candle in this case, which is our reaction candle. We like to see the sellers step in off this candle. We have our second candle closing underneath your level of resistance, which is exactly what you want to see. And then our third candle is what's important. So our third candle in this case, what we like to see is it close underneath its second candle. So if we can get that third candle to close underneath its second candle, we can expect some continuation towards the downside. In this case, your entry would be on the candle close of the third candle with a stop just to break above the second candle. And now what we'll be looking for is continuation towards the downside. And if we have the most bearish entry model is if the third candle can close below its first candle. So if we can get that close below its first candle, then this is the most bearish entry model and our stop just to break above, and we could be looking for a continuation towards low of day and below. So you can see right here, this is the exact same thing towards the upside. Our third candle is very important. If the third candle decides to close back above your previous level of resistance, then this would look like a lot different setup and we could potentially reverse back towards the upside. So you can see how important this third candle is going to be. And as I mentioned, you always want to wait for those candles to close. Wicks do the damage, bodies tell the story. So now let's go on to some charts to see what the continuation entry model looks like. So as you can see right here, we're on the SPY chart, and the key levels I'm going to mark out in this case is going to be your previous day's low. What I really want to see is the reaction that we have off of your previous day lows. If we can defend your previous day lows, potentially we could see this reversal back inside of the range here. If we break underneath your previous day lows, we can see this continue push back towards the downside underneath your previous day lows. Now let's go on to the lower time frames to see exactly what we're going to be looking for. Let's play the tape here coming into market open. So as you can see, I have the first 5 minutes played out here on SPY. You can see we're showing some weakness coming into market open. We're having this push towards the downside. So as long as we maintain underneath your 580, what we can expect is continuation towards the downside because now we're underneath your previous day's low. So as you can see right here, we're pushing back up in towards your opening candle high, your previous day lows as well. So let's really see the reaction that we have off of this level. So as you can see right here on SPY, we have this nice reaction here right off of your previous day low. So you can see right here, we have our first candle that pushes price towards the upside. So this is what's called our lead candle. We have our second candle, which is our reaction candle. You can see that we have some sellers that are stepping in right off of your previous day highs, which is your 580. And now what we have here is our third candle. So our third candle is what's called our confirmation candle. You can see in this case, right, your third candle closes below its second candle, indicating that this three pattern continuation is now in play. You can also see it closes right at your first candle, doesn't close quite below it, but this is still very much bearish. Now what we can be looking for is a trade once this candle closes with a stop just to break above its second candle high. And now what we can be looking for is a continued push towards the downside. We can first target low of day, and then we could be looking for a 1 to 2 towards the downside. Now let's play out the tape. So as you can see right there, we end up having that nice push towards the downside right off your previous day's low. You can see we end up having this 3-bar continuation towards the downside. We actually end up having another 3-bar continuation here as well. This one was a lot more bearish because you can see the third candle end up closing below its first candle. And really you can see this ignited this move towards the downside here on the overall market. So now let's go on to another example that we have. So as you can see, we're on Tesla here and we're clearly in a very strong uptrend. We're above its previous day highs. We're having this pretty big gap up on the overall markets. So the key levels I'm going to mark out in this case is going to be your previous day highs. I can also mark out your pre-market highs as well. Since we don't have any levels from its previous day, we're going to have to go on to the higher time frames to mark out key levels. So what I can go back onto is the daily chart, and I can mark out some daily levels. I can mark out this daily high. We can also mark out this low as well. And really, we're going to be using these levels as potential areas of interest coming into market open here on Tesla. Now let's go back onto lower time frames and play out tape. So as you can see, within the first 5 minutes, we're breaking above its pre-market highs along with this key level as well. Now what we can do is mark out your 5-minute opening range. And now we can go back onto lower time frames. So as you can see right here, what I have played out on Tesla, we have your 5-minute opening range, which also coincides with your higher time frame 262. So what I like to see is the reaction that we have off this level or a potential pullback in towards your pre-market highs for this continued pushback towards the upside here on Tesla. So as you can see right there, Tesla end up having this nice reaction off of your 5-minute opening range and also this 262 area as well. And you can see right there, we end up having this 3-bar pattern towards the upside. So our first candle in this case is that lead candle that pushes price in towards this 262 area. We have our second candle, which is our reaction candle. You can see that the buyers are stepping in off this candle. And then we have that third candle, which indeed closes above the second candle high along with the first candle high as well. So this is a very bullish setup here on Tesla. This is where we can go in long on that candle close. What you can have is your entry with a stop just to break below that first candle. And what we can look to target is your 262. And we can look to also target some higher time frame key levels as well. Now we can play out the tape. And you can see right there, Tesla ended up having a super solid push towards the upside, really after this nice confirmation off of your 5-minute opening range, along with this 262 as well. And you can see this had the most bullish 3-bar continuation towards the upside since we had that third candle close above that first candle. So with this being said, now let's take a look at some reversal setups. So now let's talk about our bearish entry model for a reversal. So for a reversal, what we like to see is some sort of range here in the market. So as you can see, we're ranging from the highs down towards the lows, back in towards your highs. So what we can expect at key pivot highs and lows is that the markets to reverse back inside of the range. So as you can see right here, what we have is our lead candle. So our lead candle is our first candle that pushes up in towards a key level of resistance, being this pivot high, as you can see back here. And we have our second candle, which is our reaction candle, which we like to see sellers step in. So you can see right here, we have an upper wick reaction here around our previous level of resistance. We're actually closing underneath this resistance level indicated by this body. And then our third candle is that confirmation confirmation candle. So that confirmation candle that price wants to push back towards the downside. So you can see right here, our third candle is going to be important. If that third candle can close beneath that second candle, that should indicate that price is going to move towards the downside. If we can close below our first candle, that's going to be very bearish and we can expect more acceleration towards the downside. And if we don't close beneath our second candle or our first candle whatsoever, you can see this would look a lot different of a setup if price cannot close below its second candle. So it could very much well, right, get bought up and we continue back towards the upside. So it's all dependent on how this third candle closes. So if this third candle closes below our first candle, we can expect more continuation towards the downside. And most likely we have that push all the way back down towards the low of the range. Now let's go on to the bullish entry model reversal. So as you can see right here, the bullish entry model reversal is the exact same thing, but at the low of the range now. So as you can see, we just went from the high of the range. Now we're back down towards the low of the range. And if we like to see some sort of reversal in the market, we like to see the reaction that we have off the low of the range. So you can see right here on the overall markets, we have our lead candle, which is our first candle. We have our second candle, which is our reaction candle. You can see that the buyers are somewhat stepping in off this range low. And then our third candle is what's important, which is our confirmation candle. So our third candle, if we close above its second candle, what we can be doing is looking for a entry with a stop just to break below, and we can look to target the top of the range. If we can close above its first candle, this is going to be a lot more bullish, and this is a higher probability trade that price is going to gravitate back towards the high of the range. And then of course, if we do not close above any of these candles and we end up closing weak, this is an indication that we're end up going to break underneath the low of the range, and we could very much well continue towards the downside. So understanding the reversals for the bullish and bearish entry models is important. Now let's go on to some examples to see exactly what this looks like. So as you can see right here, we're on SPY and we're clearly in a range on the overall markets. You can see we're just going to mark out a couple key levels, in this case being your range high. You can also see your range low here. So you can see we're just reversing off of your highs. We're bouncing off of your lows. So you can see this is clearly a ranging market. So what we can expect is really the reactions that we have off of your 563 and also your 553 as well. So the key levels marked out coming into today is your previous day lows. You can also have marked out your previous day highs along with your previous day's lows as well. So based off the range that we're currently in, what we like to see coming to this morning is really the break underneath your 559 for continuation lower, or the hold above your 559 for this pushback up in towards your previous day's high. Now we can play out the tape. So you can see we're still waiting for the reaction that we have off of your 559 coming into market open as we keep playing the tape here. So you can see in this case, what we have is a 5-minute setup. So we have our lead candle that pushes up in towards your 5-minute opening range. You have your second candle, which is your reaction candle. And then the third candle, which also had a reaction off of your previous day close along with your 5-minute opening range as well. And you can see how weak this candle closed. So you can see this third candle closed underneath your first candle. And now in this case, what you could be looking for is this short as soon as this 5-minute candle closes with a stop just to break above that first candle, targeting low of day and potentially your previous day lows. This would only be a 1.59 risk to reward. So now what we can do is go into lower time frames to look for a more precise entry. So now you can see once we have that clear break of structure back towards the downside, what I'm really going to be looking for is now this up close candle to be used as resistance for this continued push back towards the downside. See, price pushes back up in towards this key level. So now you can see we have a couple upper wicks right back in towards our key level. This is actually where we can look to go in short with a stop just to break above high of day. So we can go look short here with a stop just to break above high of day, which is your 558. And in this case, now what we can look to target is your low of day level and potentially your previous day's low. Now let's play out the tape. And you can see right there, SPY end up having a nice push down towards your low of day and your previous day lows as well. This was a super solid reversal trade using your previous day highs and lows as potential areas of liquidity where you can look to target. Now let's go on to the next example that I have for us. So you can see right here on the QQQs, if we're looking at the past 2 days price action, I'm fairly neutral. We end up having a big push on day one. Day two, we end up having this move back inside the middle of the range. And now on day three, we're kind of opening up right inside the middle of the range here. So the levels I can have marked out coming into today is going to be your previous day lows. I can also have marked out your previous day highs as well. And then also I can mark out the high that we created on day one. So really coming into today, what I like to see is really the reaction that we have off of these key levels. If you can maintain your 509, we can see this push back towards the upside. If we break back underneath, we can see this push all the way back towards the downside here on the overall market. So now let's go into lower time frames. The lower time frames in this case, what I can have marked out is your pre-market highs as well. Now let's play out the tape coming to market open. So as you can see, I have the tape played out here. You can see we're having this nice push up in towards your pre-market highs. Nice little reaction here as well. Now we're continuing potentially towards the downside. So now you can see on the overall markets, we end up having this nice push towards the downside here. Now we're underneath its 5-minute opening range. So what I really like to see is one of two things, right? We can also mark out this 1-minute order block as well, right? Hold of your 1-minute order block for a continuation lower, or the retest of your 511 for a continuation back towards the downside. So right here, you can see on QQQ, we're getting a nice little reaction here off of your 1-minute order block. We're closing right around your second candle, not quite your second candle here. So what we can do is wait for the next candle to play out to see some extra confirmation. So now you can see in this case, the candle confirmed this push towards the downside. What we can be looking for is this sell right off the candle close. Now what we can be looking for is a stop just to break above that candle that we just created. And we could be looking for continuation towards the downside, which is a 1 to 2. Now we can play out the tape. And you can see right there, QQQ ended up having a nice push towards the downside after having a nice reaction off that 1-minute order block, as you can see right there. So with this being said, now let's go on to a live example that I have for us today. So you can see in this case, what I have here is Tesla, and the key levels I'm going to mark out is your previous day highs, your previous day lows. You can also mark out your previous day close as well. So coming into this day, I'm fairly neutral on Tesla. What I'll be looking for is really the push underneath your previous day close for a push down in towards your previous day lows, or the hold of your 247 for this push back up in towards your previous day's highs. Now we can mark out these levels and play out the tape. So as you can see right here on Tesla, we're having this initial push right towards the downside here. Now what I'd like to see is the reaction that we have off of your previous day's low. So if we can have a nice reaction off of your previous day lows, we can see this nice push back towards the upside. But if we break underneath, we're going to see this continuation lower. So you can see right here, if I zoom in here on Tesla, this is a good example of a failed 3-bar potential reversal back towards the upside. You have our first candle, which is your lead candle. You have your second candle, which is your reaction candle. You had a nice reaction here, but you can see the third candle is what's important. The third candle, we closed below its second candle. So this is not signifying that we're going to reverse back towards the upside. This is signifying that we're just going to continue lower towards the downside. So now we can keep playing out the tape. So now you can see Tesla is just consolidating around its previous day's low. What we can have marked out in this case is your pre-market low levels. We can also mark out this 1-minute order block as well. So there's a lot of confluences right here on Tesla for a potential move towards the downside. So you can see right here, the overall market is staying heavy. We're having this continue push lower. We're staying heavy underneath this 1-minute order block, underneath your pre-market lows as well. This is a potential 3-bar play towards the downside. So you can see right here, right, we have that push back in towards that key level. You have your reaction candle, which is your second candle, showing that sellers are stepping in. Now, if we get that confirmation candle, we can see some more continuation lower if we can close below its second candle or if its first candle as well. So as you can see, we got that candle close below. This is where I go in short with a stop just to break above that first candle. And now what I can look to target is a 1 to 2 towards the downside. And you can see right there, Tesla ended up having a nice push straight down in towards that 236 and below. Now I'm going to be showing you guys the live session that I had for this day. So Tesla, let's see if we can break underneath its previous day lows here. The key level for Tesla now is going to be basically your previous day low, and this 1-minute order block is 241. With its strong relative weakness intraday, this one has a pretty big gap fill towards the downside. What I like to see is it really stay heavy underneath this 241. The overall market is still technically bearish with the Q since we haven't been able to close back above your 476. So you can see right there, I'm talking about Tesla. We're breaking underneath its previous day lows. We have this 1-minute order block here as well. We actually have this gap fill down towards that 237. So if we can stay heavy underneath this 242, we can see this push back down towards that 237. What I'm looking for Tesla now is most likely the reaction off this 1-minute order block, basically your previous day lows. All right, you can keep an eye on Tesla here. 237s with the Qs. Risk would be super tight in this case.
Yeah, I got some of the Tesla, the 237 5 puts on Tesla. Risk is super tight, just to break above that 1 minute order block. I like to see this push basically down with the overall market rejecting this 475 as well.
So you can see right there, I just entered into Tesla off the 242 puts. You can see Qs is rejecting at the exact same time as well. We're basically forming this 3-bar pattern towards the downside. In this case for Tesla, the reason why I entered in before this candle closed because of the context surrounding the Qs and a bunch of the other tickers as well. So this one was staying heavy with relative weakness. So I expected Tesla to gravitate lower. So I'm really looking for the rejection off this candle, and then I'm looking for that continuation of that 3-bar towards the downside on the overall markets. So you can see right there on Tesla, we end up closing underneath this first candle. So this basically guarantees the move down towards that 237. Qs, you end up having a nice 3-bar play as well, right off your 275.50. So now for the Qs as well, I like to see some more continuation lower.
But yeah, you can see SPY once it broke underneath previous day lows. That was the draw that we're looking for. You can see the weakness that we have on the overall markets. Tesla basically just hit our main objective, which was at 236. Now what we'll just be waiting for is if Qs wants to continue lower, SPY somewhere down towards that 553, we'll just basically bar by bar the rest of the position. But basically just hit our main objective. Now we're looking for SPY previous day lows. Qs already underneath your previous day lows. So now what we're looking for the Qs is really that Tuesday's lows that we created.
So yeah, as you can see right there on Tesla, we end up having this nice push towards the downside along with the QQQ as well. We hit our main objective being that 236. I mentioned I'm a majority of my position. Now we're just looking to bar by bar the rest of the position. So that ended up being a super solid trade on Tesla towards the downside. And with that being said, I hope you guys did enjoy the video and learned something new about the entry models. This is one of the most powerful entry models that I mentioned earlier. If you guys go and backtest this, you'll see how well and how often this sets up. So with that being said, I hope you guys did enjoy that video. If you did, I appreciate if you guys drop me a like and sub, and I'll see you guys next week for a brand new video. Peace.